What is up, YouTube? This is the Working Investor. This video is dedicated to some of my viewers that have asked me to show them how I do live option trading. So we're going to go a little bit into live option trading. So today I'm going to put on a position on MSTY, and I'm going to be completely honest. This is probably the worst time to put on any type of Bitcoin-based products, because when you put on a cash secure put, it's better to put it on when the underlying is trading on towards the bottom. But right now, when the underlying is peaking, that's not the right time to put on a cash secure put, in my humble opinion. The reason why I'm putting it on is because I've been trying to get into MSTY for quite some time, and I did put on a $22 cash secure put. I put on also two $24 cash secure puts. Of course, they pretty much expired worthless, and I just received like over $100 in premium. And I am looking to get in before some of the position before dividend day, before declaration date, which is not this week but next week. And I want to get some on dividend day, so to kind of get like a blended return. So I'm going to show you, for instance, let's say trade options. So MSTY, as you saw, is trading around $30 and change. So let's say October 18th. So the reason now, very, very, very important, guys, do not make this mistake. And it's basically the ABCs of option trading. When you have an underlying that pays a dividend, you have to be very mindful of the dates of the dividends, because they can really mess up your options. Because let's say right now you see MSTY is trading at $30.29. Let's say if October 18 would have been the payment day of it, which is not, but let's say it would have been, and I put on a $30 cash secure put. Guys, they are predicting that MSTY is going to be giving somewhere between $2, $4, $6, I don't know, some crazy amount of dividend this month, because it's going to be reflecting like 7 weeks of trading versus 4 weeks of trading. If the price drops, let's say by $4, and I put on a cash secure put for 30, that's pretty dumb, because then I'm going to be upside down. So, but the thing, luckily enough, the payment day, the declaration dividend day, is going to be the following week. So everything here is reflective of pre-dividends. It's not going to affect the dividends. But again, be very mindful of when you put the trades on, when the expirations are, and how that coincides with, that correlates with the dividends that they're going to do. So I want to get in a little cheaper. I don't like the $30. It's a little too rich. $20 is still too rich, but I'm just going to put it on. Normally, I like to look for, I look for a couple of things. I look when MSTY is trading on the lower end of the range. I look at, I try to look for a 0.16 delta. But this is just a play that I'm looking at this like a limit order, to try to get some of my entry in before the declaration date, and then the rest the other part I'm going to get in on the dividend date. So I'll try to get some dividends, and then on dividend date I will get enjoy a lower cost basis. So let's say $29 is a good price that I'm happy to buy it at, right? For now. I may not be happy if it drops too far, but let's say you can see here there's a bid-ask spread of $35 to $55. And also, I look at also like how much, like the risk to reward of how much money I'm going to be getting. So let's say on the low end, $35, right? So if you go over here, if you take $35 divided by how much money I'm putting up into collateral, so $29 a share times 100 shares is $2,900. And then you multiply that by 365 days of the year. And remember, today is the 14th of October, so the 18th is about 4 trading days away. So then you do 365 divided by 4, and then you multiply that by 100. So I'm getting 110% percent interest, like payment return on an annualized basis. And a lot of people make a good point. I mean, analyzed basis is really cool when you put on a trade, but it's not really, like, don't get too jumpy about this amazing analyzed return. It only matters if you consistently put on trades week after week after week that average around this annualized basis of 110% return. Then you could say it's truly analyzed return. But if you're just putting on a trade that's 3 days out, and it's a specific goal and it's only temporary, and you're not going to put this type of trade on every single week in, week out consistently, it doesn't really make such a big difference. But it's cool to know, like, when you put on a trade, are you, I'm getting paid 110% on an annualized basis for basically $35, nothing to write home about, for like 4 days just to have this limit order. The way I look at it, I look at it like a limit order to get it a little cheaper than it is right now. Again, so, but if you are doing it consistently, like getting a really good analyzed basis, then you can be excited. But I do want to get in, let's say around, that's for $35. I want to put a $40 order in, see if it gets filled for 40 and get a little bit more for that, right? Probably won't, but we can just leave it in there for now. While we wait for this thing to get filled, it may or may not get filled. We'll see. And actually, right now, you see the bid-ask spread. I'm actually on the higher end of the bid-ask spread because MSTY right now is going. It's all over the place. Another trade I want to do is another Bitcoin play, and this is BITX. But before we get to BITX is a double leverage Bitcoin ETF, and it's very important. Oh my God. It's very important to look at the underlying. So BITX is based on Bitcoin. So always look at always look at the underlying. So you see Bitcoin, if you go back the past 3 months, right now it's one of the highest points. It actually was at 67, but right now it's at 66,000. So really you kind of want to get it at the bottom. So when you put on a cash secure put, you want to be doing it when it's like closer to the bottom, or maybe here, maybe 59,000, 60,000, but 60, this is a little bit high. So it's probably not the best time to put on a BITX trade. Just for disclosure, because it's probably not the best time. So for hypothetically, if I want to put on a BITX, maybe I will, maybe I won't do it. You see, obviously it's trading at $30.62. This moves twice the momentum as Bitcoin. And obviously you see here, like the bottom is 21, the range is $21, $22. Like I said, even though it's a double leverage Bitcoin play, it still is range bound. And so obviously, like, this is not the best time. And if I want to do a cash secure put, I want something at least around 24, 25, no higher than that, because I want to be closer to the floor. And I look for like to something called one standard deviation. So one standard deviation basically means that 86% of the probability will fall within a standard deviation. So if you see here on the left, I'm going about 11 days out to October 25th. And you see on the left over here, that could have been the trade filled. I think that's filled. We'll take a look later. But you see here where it says delta 0.24, so a 24% chance you're gonna, it's gonna go below that number. It doesn't necessarily, but it's so far. It's like the expected return. So let's say a 0.26, the $26 put is a 0.15, almost 0.16 delta. So that's about a one standard deviation away. But if I wanted like 20, as you saw, 20, so I look into the standard deviation to be a standard deviation away, like a 0.16 delta or lower. So you see, if I do a one standard deviation away, I would make $50 roughly in premium, which is almost a 2% return, 2% per week, because it's 11 days out. But another thing you want to consider is you want to be on the lower end of the trade. But the lower end of the trade, you see delta is a 0.08 delta, and so it is a very low delta because it's pretty far out of the money. And I would make about 1%, right? Because 0.25 times 100 shares is $25 for $2,400 to put up. So that's about 1%, but that's 1% in almost 2 weeks. I like to go for more like 1% per week, because if you go for 1% per week, that's a 52% annualized return. That's something that gets me excited. So if I put the trade on, I would probably think of something like a $26 put, which is like $4 out of the money. But again, it's not the right time. It's really, really not the right time. The MSTY I'm looking into because I really want to get into that position. But BITX, it may not be the right time. If I would, this would make sense right now. But in the right time, I would rather have it at a $24 strike price, if that makes any sense. But hypothetically, if I wanted to go into it, let's say I wanted to do sell, I could probably, so if you do the math, let's say you see the bid ask, so the bid says 45 cents or $45 for 100 shares, and it's a 26 strike price. So if you, again, we said $45. So $45 divided by $2,600 to put up, right? And then multiply that by 365 days of the year, divided by 11 days in the trade, because 11 days still until the 25th, from the 14th of October to the 25th of October. And then you multiply that by 100. At least you know you're getting around. When you enter the trade, you're going to get around a 57% annualized return. So that's how I look into it. So I look into the annualized return. I look into the deltas. I look into the range. So these are some things that I consider. And like I said, when something is near the peak of elevation, it may or may not be the best time to get into something, unless you really want to get into it and look at it like a limit order. Then, if you're going to buy it anyways, doing a limit order, you're getting like better than the market rate currently. You know what I mean? Again, this is not financial advice. You have to do your own diligence, do your own research. Anyways, this is the Working Investor over and out. I hope you guys have a wonderful trading day.